Do you remember the term too big to fail? It's been used since the 2008 financial collapse to explain how the biggest banks are so large that the economy would collapse if they did. Enter 2013, and the biggest financial firms are even bigger than they were in 2008. And it's not just the banks. The wireless telecommunications industry is seeing a new wave of consolidation coupled with price hikes. Is it possible mobile carriers are starting a new era of too big to talk? So much so that a monopoly is starting to form.
We have seen our telecommunications companies get bigger and bigger, and we've seen their returns get bigger and bigger.
According to CTIA, a wireless telecommunications trade association, 10 years ago, the top 4 wireless carriers controlled 63% of the market. As of July 2013, the top 4 players, Verizon, AT&T, Sprint, and T-Mobile, control 93% of the market. These companies are getting more powerful and looking to gain even more influence. Verizon just agreed to buy out their UK corporate partner Vodafone for $130 billion. This would be one of the biggest deals in all corporate history. Paul Barbaglio of Bloomberg BNA has more.
They see the future as wireless, and they do not want to share the profits they will be getting with Vodafone anymore.
And Verizon's profits are growing. They're up 4.4% from last year. But so are their prices. The average Verizon wireless bill jumped 7.1% since March of this year. At the same time, the income gap in the U.S. has grown to the highest recorded level in over a century. Ken Moelis, the CEO of Moelis & Company, one of the world's leading mergers and acquisitions firms, says consolidation is part and parcel of the economy.
The benefits of being large are your power in the market and your power to distribute, your power to command price.
AT&T wants in on the action. They just announced a stock buyback and deal to buy international competitor Leap Wireless. But large firms don't grow without their own challenges.
Very difficult for a very large company to maintain the level of innovation and creativity. Some do it very well, but it's difficult. Let's face it.
He also said the telecommunications industry is a pretty dynamic environment and competition is healthy despite being heavily regulated. So what implications does consolidation have for the consumer?
What Verizon and AT&T have found in rolling out 4G LTE, the faster speed broadband services, is that this is an expensive proposition. As they put up towers and as they deploy the spectrum, they are finding enormous costs, and they have to recoup that somewhere. The trend of increased monthly bills is unfortunately a reality.
Generally, monopolies will increase their profits by producing fewer goods and charging higher prices. Between the number 1 and number 2 cell phone carriers, Verizon and AT&T service over 205 million accounts. If we see much more consolidation in this space, customers' voices may not be big enough to hear. In Washington, D.C., Perry Ann Boring, RT.